The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. The first charts that I post up today comes from our good friend down in Longboat Key, Florida, overlooking Sarasota. You can see the city of Sarasota, Florida there with that beautiful blood snow moon. And then the next one, of course, is a little bit later at night. And then finally, you'll see the one with the sun going down in the sunset. That's what he has to live through each day, folks. Life is really tough down there at Longboat Key. And then I've also posted the chart of the sailor kissing the girl from when the war was over in World War II there in New York, and by golly, you can see here that somebody wrote /tag me too on her leg. They removed that, but we've been there many times. A few years ago, a lady, elderly lady in her Mercedes-Benz, had a senior moment and hit that statue by accident. She had fallen asleep, and it knocked the statue over, and it was out of commission for a couple of years. But it's interesting. That guy just, well, that's a long story. Let's take a look here at this DAX here. This is what's interesting because the DAX and the FTSE are looking very, very similar. VE Day, you got that right. You'll notice here that we did make a slightly higher high on that 60-minute DAX chart, and then we reversed only about 65 points, which in the DAX is quite a bit, but that's neither here nor there. But if we look at the FTSE, we hit this, and remember now the FTSE, this is a 4-hour chart, so this was done over a couple days ago. We really haven't taken out that high of that ABCD. Now we'll see if that's going to mean anything or not. The full moon has now passed, but we're still in the area where it can work. Usually it's 2 days on either side, so we've got until possibly tomorrow to look at it. We will have Rich Anderson as our guest today, talking to us about some of these tariffs, the hog market, the cattle market, and a few other things that he has ideas about that's always very, very interesting. Now, I've had a question about Bitcoin, and I wanted to bring it to your attention. We were looking at that Gartley pattern down there. By the way, I haven't traded this. I know some people have, but we went right down to that 78% level there at 33.50. We got all the way up to 39.50, a pretty big move. So now we've had this, really good 78% retracement off that point C. So this is going to be interesting to see if, in fact, we can get above that 4,000 level. Remember the long-term ABCD structure on this over the last 9 years, going back to 2010, we've had 83% corrections in the Bitcoin, and that's including when it went 500 and went back to 100, and just some huge swings. And from 19,000 down to 3,800, we went a little below that at 3,100, but it was still within the ballpark. And now we're going to see if it has anything to go on the upside. This is about, I believe I don't really know because this stuff is so far above my pay grade. I just listen to what John Jameson tells me, and he's pretty smart. But it's really about the blockchain, and we're going to see, what's going to happen here with some of these other things. One other thing that's happened in the news that is newsworthy, a lot of it we don't hear about because everything is about the politics, and that is for the first time in the history of the UK, which is far, far longer than ours, they have actually made someone stateless. This young lady who went to join ISIS, and now she's asked to come back, and they have taken away her passport and disowned her. And we have someone in the United States trying to do that also. So I don't know what's going to happen here. Most probably what will happen is that we will be looking at something that will be a little bit more interesting in the in the political section than we will at any other time. So we'll pay close attention to that as it goes out. Frankly, if it wasn't anything, the That's very good. Very good, David. David, you are the most well-read person I have ever met. I don't know how you do it. I mean, you must have something on a computer that tells you all this stuff. I don't know where you get all that knowledge, but by gosh, God bless you. We really, really certainly appreciate it. We've had a question here about Softy, Microsoft. I wanted to bring it to your attention here. Now, this is as of yesterday. We got up to that 108 level. We closed a little bit below it yesterday. That's the 61% retracement. So it is made a 61% retracement from the low on the 26th of December up to the high that we had made, way back on October the 1st. So that is completed. All the others are also completing. We've completed in the New York Stock Exchange Index. I don't want to go over this. You've heard this before. Really means very, very little at all. I wanted to share with you from our friend Dennis Gartman of the Gartman Letter. He's got some really interesting things here on a longer term basis of what this fear and greed index does over time. And we are up in the zone here of the greed. That's a GREED. And you'll see that we're up into that area right here. I have something very interesting this morning, but I need a little bit more time, so we'll cover that right after the break. It's about the fear, the false evidence appearing real, and it's about those four major things that you fear most in the market and how absurd they really are. We'll cover that when we come up to the other break. But you'll notice that we are into this greed section one more time, and but believe me, it's hard to trade off of that. So really what you have to be looking at what we're doing. They're posting here that the Treasury is talking. Whoever knows what they're talking about, I'm sure it's going to be very, very interesting. However, we are going to be working here in the den, so we won't be listening. I'm sure someone will they're taking $1 billion back from California. Good luck getting the money. Good luck getting that money. That's going to go through the courts. I can promise you that. There's no chance of that. That's occurring. We'll have to wait and see. One of the that was the most silliest thing, trying to build a train from San Francisco to Los Angeles with all the earthquakes that they have in there. All it takes is one bad one, and that train will be history. So I don't understand it myself, but well, another typical boondoggle of what we're going through in some of these markets. Folks, the gold market has broken out. We've been talking about the gold market for quite some time, and one of the key things that was really telling us that gold market really looked like it had some strong legs was the fact that we had that XAU looking so extremely strong. And I had it here, and by golly, it has just appeared. And let me just get it up here. So see here, we've already gone above. Let me just get this was my scheduled high for this week. You'll notice here that it went above the 1.618 level there at 1340. We got up to 1349 last night. We've been going sideways, and on the longer term chart on the gold, we've broken out above that 1330 level, and that gives a price objective, I believe, of 1353 to 1356 is what we're looking at. Silver is still lagging behind. Platinum is still still doing pretty good. But the gold is in good shape. And not only that, yesterday on the gold, there was a huge increase in the open interest. There were a lot of new buyers coming in. We'll be right back. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, one of our colleagues and good friends over in the UK, Tom Hugard, is a very, very astute trader and market analyst, and he was asked to make a presentation at one of the large organizations in the UK. This is coming up actually this Friday, and he asked me some questions about some of the things that we'd worked on through the years. Tom's been here to visit me in Tucson several times. We've traveled all over the world together, and he is really pretty sharp, and his whole factor of speaking is based on the psychology of trading. He is extremely interested. For the past 5 years, he's done an extensive study, much like what Mark Douglas had did with his book, The Disciplined Trader, and he found pretty much the same thing that Mark had found, that 90% of the first people starting usually lose money, but those that stick with it over a longer period of time actually do pretty good. But the key to his speech was the fact that these folks that trade keep making the same mistakes over and over again. His question to me was, why do they do that? And, you have to go back to the 4 fears that Mark talked about. And let's just break them down one by one, because they're not really fears, folks. These are factoids. These are things that happen to trading all the time. They're there every day. They shouldn't be feared. They should be accepted and understood. That's what Tom is trying to, give the folks information on this, because the first one, the fear of being wrong. In other words, if you think you're not going to be wrong, no one's going to be right all the time, so that one's certainly wrong. The second one is the fear of losing money. That's related to the first one, because you're not going to be right all the time. There's going to be times when you absolutely lose money. And the third one, the fear of missing out. Of course, you can't be in front of the machine all the time. You're going to miss some trades. Your orders are not going to be hit. You're going to get stopped out on the low or the high. That's nothing new. And finally, the fourth one, the fear of leaving money on the table. The only person that doesn't leave money on the table is those 1 or 2 people that get filled on the high ticks for the shorts and the low ticks for the buys. That's basically it. So that's the bottom line of what we're looking at. So keep in mind that that's what's happening. It's very, very important. Now, I wanted to bring to your attention one of the things that we were watching these past few days has been in the wheat market. And just a few minutes ago, some news came out. We'll be able to see this here in just a second. We'll get it up here to take a look at it. You'll get this up here. Here we go. This is from our good friend, Mr. Z. We were talking about this the other day. You'll notice that we had the ABCD butterfly pattern down there at roughly $5 in the March wheat. We're now trading 18 cents lower to that, and then we just got news just a few minutes ago from our friend Cy Monley at Sylvius Financial that we just lost a big wheat order on this tariff thing, supposedly, and I imagine they're going to push the market down. More bad news. Now, we're right over the full moon area, which is usually very, very bullish to the wheat when you're making a bottom, but with news like this, we'll have to wait and see. Now, this might be a case where the news might be out, but frankly, we'd have to wait and see if that is if that's going to be the case. We'll try to ask our Rich Anderson when he comes on in about 10 minutes, what his feeling is, on this, and that's what we're watching. Another one that some folks have asked about, and that is the crude oil market. We brought this to your attention yesterday. We were watching crude oil. We've had this pattern that's been going on since February 1st. We came down. You'll notice we made that a really nice butterfly pattern down there at the 51.25 level. That was just barely above the 382 level from our low down at 46. And then we had this ABCD structure that tells us we're going to get about to 57, and we're trading around 50, just tad under 56 right now, I guess. But that's 55 and change. But that's the target that we're looking at is just a tad at 57 even per barrel. Now remember, the high that we made on the weekly chart certainly came in at that $77 a barrel. So this is nothing more than a rally back against that. So the trend on the longer term is still down, but we are having this rally as we walk through some of these different things that we're watching. One other question that someone asked yesterday was about the Boeing Airlines chart that I put up. They asked what that pattern was. I'll bring it up to your. But hey, David, this is very good. David is posting in here that he was lucky to run into Adrian Tilgaray. Adrian is doing a seminar today, for a webinar today at 4:30. All you have to do is go to Trading on Target, and I'm sure she'll give you the information for it. So go to tradingontarget.com, and you'll hear Adrian. She's going to be in there for about 45 minutes to an hour answering questions for you. I'll be there. And I certainly got some questions because I really, really like her very much because she's helped me and a lot of my students over the years. So if you get a chance, go to it, www.tradingontarget.com. David, as his mystery fingers hit the keyboard, have already posted the link. So thank you, David. Appreciate it very much. Now we'll take a quick look here at this chart on the Boeing Airlines. This is a weekly chart going back over the past year. Basically what it is, you'll see the three drive to a top pattern that ended in October. The market then went from 396 to 288, dropped $112, and then in the past 7 weeks has gone straight up to make a 1.27 expansion. That makes this pattern a three peaks and a domed house. This was a pattern by George Lindsay. When George passed away, Arch Crawford did a little bit of work on it, but not too much. But the guy that really worked on it back in the 80s was Jerry Favors out of Columbus, Ohio. Super guy. Died at his desk of a heart attack at the age of, I think he was 42. I'd been to visit him and Leslie a couple times, and what a nice guy and what a really good technician he was. The problem was he smoked 2 packs of cigarettes a day, and that's not very healthy. And anyway, that's this pattern. Now that came in at 417.99. We closed yesterday at 416 and change. That pattern is complete. If we go above 425, that would certainly be a break in that pattern. It means that it would not fulfill, what you're looking at. So that's what that pattern means. It's very rare. Ed Carlson from the Market Seattle Technicians Association certainly had that particular thing going on at that area too. So we'll just keep a close eye on this as we walk through some of these other things that we're looking at here this morning. Okay. One other question. Let me see if I can remember what it is, and I believe it's right here. Hold it. It is about Goldman Sachs. Let's just get this up here because it is this is one of the things that told us that top was in, way back in January is when it topped. And we have not exceeded the 38% retracement yet in this 7-week rally that we've had in the market. The other question people keep asking me is about the bonds. Folks, I believe the bonds are still very bearish. I don't see any reason not to think that. We've got that major, Gartley, bearish Gartley in the German Bund that has not been exceeded. Our bonds can't get much above 147 in the March. That's also negative. There should be a strong ABCD level up there at 147.26 to 148, but we haven't been able to do that. Every time we get above 147, it's being pushed back, and that's not a small market, folks. That's the second largest of all the commodity markets we trade. Treasury notes being the first, and then, of course, the other being second. Stay tuned for our good friend Rich Anderson of Anderson Capital Management.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back with Rich Anderson of Anderson Capital Management. Rich, are you there?
You bet. Good morning, Larry.
Good morning. Just for a little information, Rich, it's 28 degrees with snow on the mountains here in Tucson, Arizona.
Hey, that's warm.
So much.
That's warm. And whenever it's snowing, it's warm, you know. It's when it goes below zero that you start to worry.
Yeah, so much for global warming today anyway. How is it over there in Minneapolis?
Well, schools are closed today. We're expecting, snowing right now. We're expecting a big snowstorm, and of course there's this front coming through over the next 2 weeks that they're forecasting up to 5 inches of moisture, and it's roughly 10 inches of snow per inch of moisture. So wherever that lands, that could be up to 4 or 5 feet of snow, and 50 inches, 4+ feet of snow, and the area it's tracking right now is in leased feedlots, and that's why you've got the nearby cattle showing such strength.
Rich, what about the El Nino? We've been watching that with Cy for quite some time. It's in the news now. Does that mean anything, or is it just too early?
It's just too early. It's just too early. The one thing I can tell you is that there have been other years where, you look out at your fields, and now I'm in the city, but if you were out in the country, you'd be looking at your fields, and they're black, and there's no snow on the ground. Well, there's a lot of snow on the ground, and it's continuing to snow. The net of that is we won't be getting anything planted early, and down in the Delta, it's too wet. So, all the areas are going to get started later than normal. We got the Ag Forum in Washington, D.C., Arlington, Virginia, really, but same difference, starting Thursday and Friday, and they'll be talking about the acreage, the corn-bean ratio, which is often used as the indicator of are we going to plant more corn or more beans. It's kind of middle range and doesn't really dictate a major shift anymore. Because you're doing field work in the fall and adding, fertilizers and stuff, there's only a limited amount of switching you can do in acreage anyway. So the other big thing is, of course, China. With China, we need to get a commitment from them that they're going to buy stuff. Trump's indicating that that's likely to happen. I don't doubt that they'll sign something. But it might take 2 to 6 months for them to continue to buy as we take 2 to 6 months to drop off our tariffs. The forced transfer of technology has been and is the big sticking point, and somehow they'll muddle through that. And then the key point is, as Ronald Reagan said, trust but verify. How do we monitor and how do we enforce this agreement that we have? And then they've added a ringer. They'd like the Chinese to make their yuan, stabilize their currency. So there's lots of floating things, and then you've got May and Juncker of Germany, and is it going to be a hard Brexit, no Brexit? What's going on? And then we still need to get something done with Mexico because they're not buying our pork because of the steel tariffs. So we've got lots of balls in the air. And on top of that, option expirations on Friday, and the gamma traders, had to sell like crazy to adjust their option positions. And that's you see that so often as you go into a quarterly option expiration, and that's kind of, I believe, what happened in the grain markets, and that should cease Wednesday, which is, today, Wednesday or tomorrow at the latest, and then because if I'm short 1,000 puts and it goes to a strike price, I got to continue to sell more futures, and as I sell more futures, I drop their price down more, which makes me need to sell more futures. Well, they'll get to the point where they just cover some of those puts, and then you'll see the market react back up. That's kind of what's going on in the grains in its simplest form.
Yeah. Rich, someone's asking us a question about the cannabis industry. Do you have any involvement in that? I mean, have you watched the stocks or anything?
No, I don't. I don't watch the stocks. I don't have any involvement in it. I think there's this will be a major disruptor to the pharmaceutical industry. I think it'll be a major benefit to agriculture. Actually, my farms are in South Dakota, and that state isn't one that allows, there are 4 states that don't allow the planting of marijuana, the cannabis, whatever you want to call it. And then when you do plant it, it has to be below a certain level. But I think it's going to be, a major impact will be on the effect it has on the drug industry, because these drug companies won't be able to patent these things and charge astronomical prices. You know what I'm saying? I think that could be one of the the major disruptors. And that's where I think that there's going to be opportunity. But I don't know anything about any of the drug stocks. I do think it's going to be amazingly helpful for a lot of people.
I think so. You know, we've talked over the 50 years we've known each other about that particular area of pharmaceuticals, that recreational pharmaceuticals that you and I have not involved in, but some other folks, of course, are heavily involved in it. Rich, what's your feeling on the gold market here? We had a big breakout, above the old highs at 1330 yesterday, with about a 10,000 increase in open interest. It certainly looks like it's for real, doesn't it?
Yeah. If you remember, over the last several months, whenever I've been on, actually going back for the last year, I kind of mentioned how there was someone selling gold like crazy because they weren't producing enough oil, right? Mm-hmm. Venezuela. Well, that's come to an end, and when they tried to get the last chunk of gold out of England, about a month ago, they said no. So you've eliminated a major seller to the market that's put a lid on things. And now you've got the Chinese banks basically doing a form of QEing themselves, cutting their reserve requirements, trying to stimulate the economy. And by the way, it apparently needs that stimulation. If you look at the exports of Japan to China, we're down 17% last month. They're trying to get things wound back up in China, and they have yet to figure out how to kickstart it, let's say. Mm-hmm. I mean, they're trying, but they haven't done it yet.
Rich, I'm posting a chart in the Tiger Den now about the June hogs. We had that move down at 74. It jumped 4 cents, roughly $1,600. And then yesterday I noticed that it went down the limit. What was happening over there?
Again, it's a rumor which may or may not be true. The head veterinarian of Canada said that it's not true. The rumor yesterday was that there's been some African swine flu virus in some of the Canadian feed, which of course, some of that Canadian feed probably gets down into the U.S. And the fear is that if it gets into this country, then people will be reluctant to buy pork exports from U.S. Now, at least up to this point, there's no human transfer of African swine flu to humans, the animal to human. But that's a concern, and that's what caused the limit down. We closed back up above 74.5, and it's going to be good.
Okay, listen, can you stay with us for a few more minutes?
I'll be here.
We have a couple
got
questions.
Time.
You bet. 877-927-6648. Rich Anderson, Anderson Capital Management.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks, and we are talking with Rich Anderson. Rich, we have a question from one of our listeners regarding agricultural stocks like Caterpillar and John Deere. Any feeling on those, or even the ones that supply the, the fertilizer and stuff?
Not really. As you know, my wife's a stock trader. I would just, if I were to look at a stock, I would just look at the chart, and that would, like Caterpillar they had looks like they've shown some pretty good strength here. That obviously the anticipation is that they're going to get something done with China. These stocks, John Deere, Caterpillar, they're international companies, and it has to do with how the world's going, and they're anticipating that they'll be buying a bunch of stuff for China. But generally, the world's kind of got some slowdown going on. That's why these interest rates are where they are right now. They don't have to worry about inflation because the whole world's coming under a slowdown. But I think they're anticipating that they'll get some commitments to buy machinery, just like the Chinese are buying the Boeing jets. But I don't really follow stocks.
Hey, Rich, I just posted a long-term chart going back the last 12, 13 months in the wheat market, and we're right at a 61% retracement down here at the 479 level. And some bad news hit this morning. Cy just let me know a few minutes ago that they had canceled a wheat order or something like that may or may not have been in the market. Any feeling about what's going on in that wheat? Is it just lack of demand, or what's going on?
Well, it's initially we had Russia selling like crazy. Once they got out of the market, people thought, well, maybe we'll start to sell more, but we haven't, because there are still other people in the world that are selling. The Australian crop's at 11-year low, but wheat's kind of like a weed. It's grown all over the world. And between freight rates and other things, we haven't been competitive in so many different areas. And your window for selling something is only 2 or 3 months, and then after that you got a new crop of wheat someplace else in the world, and that's kind of what's going on. The guys that and the options, they're historically, remember, we always looked for a February break, Larry. And this is the February break. We're getting it, and it's being accelerated in wheat by option expiration, where the gamma traders are having to sell to neutralize their net delta positions in the options. But the net of it is we have not been getting some of the purchases that we had hoped. Egypt and some of these countries would be coming to us, and they haven't been, and we've just been missing out.
We have a question from one of our folks up in Utah, and that is, how big of a slowdown is this in China that we're looking at? Is China that big an effect of the slowdown in the grains, or what's going on?
They basically just stopped buying for quite some time and used up their reserves, and they got their reserves and putting it down to nil now. So they're going to be needing stuff, but Brazil's crop is about 40% harvested, so there'll be beans coming out of Brazil. There'll be motivation to buy our beans because of the negotiations. They'll be committing to buy X number of billions of dollars of this and that. Trump said yesterday, don't be surprised about how much corn they're going to buy. They're trying to trade these things off so they don't have to be as agreeable on the forced transfer of technology, which it has really hurt our position in the world, and that's the challenge. But we'll get, Dave Norton used to say he always looked at the new lows, because from the new lows is where bull markets come from.
That's for sure.
They start from new lows.
Rich, what about you and your brother? Are they having, you guys hurt bad with this stuff, or how are you holding? I know you hold up okay, but how much has it affected you over there?
Well, the farmers got bailed out in their beans, in that the government gave them big subsidies to adjust for the drop in the price because the Chinese weren't buying the soybeans. So actual farm income is actually up. It's not like it was in 2013, 2014, but it's up, and we haven't had a weather problem in 4 or 5 years. It's just a matter of time before there'll be something. And every year I always tell you, the markets get alive when a farmer puts his money in the ground. When they start to plant, they're putting $150, $200 an acre into the ground, and that's when the markets get sensitive, and that's when the things come to life, and it's typically after the February break, because you don't start planting until the middle of April through the, middle of March through the middle of April. So,
how about all this snow that's going to melt? Is that going to affect planting and stuff? What do you think?
Absolutely, it's going to make it late, and the number of increase in acres typically is, if you get started early, you've got the planter hooked up, you just continue to plant a few more acres. Nobody's getting started early this year. There's moisture everywhere. It's going to take a while to dry out. They'll eventually get the crops in, but nobody's going to get an early start. So I think it makes it for a more interesting and volatile situation come, middle of March on into the growing season, into the July and August. I think we're going to have an exciting summer, but everybody's been sitting on their hands waiting for the Chinese deal to get cleared and, get something done with Europe. They're worried that if they put a tariff on European cars, that they would stop buying some of our grains too. So, there's just tank mines everywhere, and we've got to get some of this stuff cleared.
Hey, listen, thanks for joining us, buddy. I really appreciate it. And try to stay warm today if you can, all right?
All righty. Take care.
Hey, thanks a lot. Rich Anderson of Anderson Capital Management giving us a preview of what we're looking at. We'll be following Rich very, very closely here, because he and Cy and I watch these El Nino currents that have started to come up, and if we start seeing any sign of these things. But as Rich said, from new bull markets started when markets are making lows. So pay attention to this wheat market, folks. We're over this full moon at perigee. We're at a 61% retracement on that long-term daily wheat chart for the March. We're new lows for December and July. So watch for some type of a reversal. If you close really strong today with this really bad news that we just had, that would be a good sign that the market may be, finally oversold enough to get a rally started. Whether it'll be a new bull market or not, we don't know. But as Rich mentioned, it's been 4 years since we've had any type of a problem with the crops. That's in itself an outlier event. That's never happened. So we're going to find out, of course, if this will turn these things. But we certainly got them on our watch list, and we'll be looking at. Regarding the foreign currency, folks, a lot of talk about the strength in the U.S. dollar and everything. But if we take a look at this euro here, this is a 4-hour chart on the euro. all we've done is after we made that little 3-drive pattern down there at that ABCD pattern at 1240, we were able to rally about 120 pips. That was right at a 382 retracement of the high that we made, back on January 30th. Guess what that was? Another one of those moon things. So pay attention to what's going on here, and we'll see if that's going to be helpful. So we'll see. Anyway, we'll be right back after the break.
We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my 1-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back and been asked to take a look at the silver chart. This is a daily silver chart going back over the past 9 months. You'll notice we made that bottom down there at 1380, which you will remember was a 78% level on the long-term weekly chart. We've now rallied $2.50 an ounce. We got up to 1603 today. We have not taken out the highs of January as of yet. That's around 1620, and you can see gold has exploded through that without any trouble at all. And, we should be at least 1660 on the silver market. If it's running tick for tick with gold, and it's certainly not do that. But if you get this silver up to 1665, that's going to be an awfully nice pattern, setting at the 78% level with that 3-drive pattern. If we get to that level, that would certainly take gold at least to 1353 to 1360, I would think, but you have to wait to see these things unfold. But it is lagging badly. So the $64 question is whether it's going to be able to do that, and we'll be able to see that. Okay, well, we have a question here about, okay, I'll answer that question for you, Bob, in an email. So just drop me that same note in an email, and I'll be happy to send it off to you. How's your weather up there in Spokane? You getting any snow? There's snow here in Tucson, so it's 28 degrees. So we'll be back. Well, we've got another minute or so here, but we'll be back tomorrow and talk to you more about some of these markets that are moving. Keep an eye on that euro, folks, because if it can get above 113.60, this means it will be going the same way. Well, it's snow here in 28 degrees, and I'm a good 1,500 miles south of you. So the weather is certainly a little chilly in the west, at least as we go through some of these days of February, but we should start warming up in Tucson quickly. Those of you that have been here to visit me, there was actually water running very strongly in the Rito River that you guys know that we go back and forth across all the time. It's really amazing to see the whitecaps on that water because it's almost always bone dry, but the last few days, boy, it has been running with water. So very, very interesting. So we'll pay attention to some of that. So live every day in an attitude of gratitude, and may God bless, and we'll see you on the flip side tomorrow.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.